Hey everyone, Tarek Backus here with Hold Net Worth, and in today's video, again, I will be talking about Tesla. This channel is not supposed to be about Tesla. It's supposed to be about investing and not just Tesla. The channel is called Whole Net Worth. Maybe I should just title it Tesla Net Worth. But I did want to talk about the forecast that I've come up with. It's a very high-level forecast, pretty much a back of a napkin type of forecast, but I wanted to show you what the numbers are looking like based on my forecasting, but also what other people in the YouTube community have been forecasting. And you can see a general trend that based on everybody's assumptions that are doing a somewhat in-depth forecast, you can see a pretty high valuation coming out. Now mine is not in-depth at all, it's very rough, very high level. But I just wanted to show some of those factors on, what is making up that market cap or that valuation, that forecast out in 2030, and why people are coming to that forecast. Now, Tesla is a big stock, a big company. There's a lot of hype around it right now. And so I did want to emphasize how people are coming up with these numbers. Because when I started investing in Tesla, I looked at it as the next opportunity. I saw the world transitioning to EVs, and I saw Tesla being a leader. However, there was still a lot of hurdles, and there still is to this day. But I wasn't really understanding how, let's say, ARK Invest or Ron Barron were coming up on their valuations of the company, especially when, the argument was there that Tesla is, right now valued at about just under 700 billion, and you have other car makers that are valued at 100 billion, 150 billion, and 200 billion. So how is Tesla being valued at such a higher rate? Now there's a couple factors in there. Their margins, how much cars they're projected to produce, their energy business, and also the big thing, autonomous as well. So there's a lot of factors that play in here with Tesla. But I just want to show you how I came up with my numbers, and they're very rough. But I did want to talk about the thumbnail that I have up there, and it's it came from a Twitter feed, at Vincent 13031925, and he does I've seen a lot of Tesla tweets from him, so I'm actually not sure if he's big in the Tesla community. I think he is. I've seen his name a few times, and I'm not very big in the Tesla community, but he shows here the tech stocks returns over the last 10 years. And you see Tesla has returned at 8,197% return. But look at other tech companies like Nvidia, 3,789, Netflix, 1,699, Amazon, 1,700, Adobe, 1,561, Apple, 934, Microsoft, 749, and Google, 505. I first started getting into investing in 2012, and I was basically learning the Warren Buffett strategy of picking good value companies that have, let's say, a real strong economic moat, and also a company that has a reoccurring business model where they have reoccurring sales, so that it's highly unlikely for them to go out of business because you're always purchasing from them, even in, let's say, a downturn in the market, or if the economy goes bad. For instance, you're going to brush your teeth every day. So Crest or Procter & Gamble might be a good company. Probably going to eat chips and oatmeal and whatnot, and drink cola, Pepsi. So Pepsi is another one of those companies. So I was heavily focused around building and structuring my portfolio around those type of companies. However, and I would stay away from tech because Warren Buffett was very adamant on not getting into technology, just because anybody can come in and disrupt you at any given time. And there was a lot of sense to that. However, as I invested in my companies, I saw people investing in Apple and Google, and even Netflix, and their growth rate was just astronomical, and I missed out on great returns. And I watched the world go from, regular cell phones or flip phones to Blackberries to the modern day smartphone. And I was one of the first people to get an iPhone. I got the iPhone 3GS, And I saw how great this product was and how useful it was in my daily life. And I also saw people that had BlackBerries that were so adamant on not switching over. And, you know, they wanted the touch keyboard and whatnot, but they didn't understand how good of a product having a touchscreen was, or an Apple product, or even a Samsung for that matter, until they had it in their hands. And then it was a no-brainer between that and a BlackBerry. And I really feel that's what's happening between an ICE vehicle and an EV vehicle. And Tesla, to me, is the leader in the pack. They will take market share. That's my opinion. So you have to do your own due diligence. But, you know, past performance does not predict future performance. So we know that. So will Tesla do another 8,000% return in the next 10 years? It's highly unlikely that that's the case. However, does that mean they aren't going to produce any returns or substantial returns in the future? That may not be necessarily true either. So we have to look at it and see how we can value this company and how we can really actually get to those numbers from a systematic way, or a way of putting pieces of the puzzle together and making some reasonable assumptions to say, yeah, if I make these assumptions and if Tesla executes the way they have said, or, you know, have given guidance that they will, is it likely that the company will hit these price targets or market cap by 2030, 2025, whatever year you want to pick? So in my forecast here, I did a real rough forecast. You can see that basically I have going from 2020 to 2030. And what I did was I said that Tesla they hit their, you know, roughly 500,000 mark this year. I said based on what the factories are able to produce in Shanghai and Fremont, and having Berlin come online, and maybe Austin by the end of the year, I said I'm being optimistic at 1.1 million cars in 2021. Then from there, I strictly said a growth rate of 40% per year until 2030. Now, Elon Musk has given guidance that Tesla can and, you know, can, and he foresees them doing a 40% growth rate from now until 2030. If that happens, that's yet to be seen, but I'm going to take him at word. And because of that, that gives me my cars produced until 2030 at a 40% clip per year. Now, what I did was I did a simple, rough calculation. I said, revenue per vehicle. Let's average and say, if all these are vehicles, they all sell at an average rate of $40,000 per vehicle. Based on that, I get at 2030 roughly 900 billion worth of revenue by 2030 on 22 million vehicles being sold. Now, what I did here was I just took price to sales, and I said in today's date, the price to sales is at 24, based on what Tesla is trading at right now. But I said over the time, as Tesla becomes a more mature company, that price to sales is going to drop to something more in the line of mature companies. So if you look at Apple, right now, Apple is trading at about 8 price to sales, and Amazon is trading at about, I think, 4 or 6. So I said, you know what, 6, by the time I get to 2030, 6 might be a good place for Tesla to be if I'm being, you know, conservative. So what I said is every year, let's say the price to sales drops by 2. So I multiplied the revenue by the price to sales in that year, and that gets me out to 2030 a market cap of $5 trillion. Now you divide that by roughly $1 billion worth of shares, and that gets me at about a price per share of $5,400. Now, is this forecast accurate? Hell no. This is by no means accurate at all. This is a rough scenario that I pulled out using a 40% growth and just using rough numbers on 40,000 per car. However, If you look at other models out there on YouTube, Warren, Redlick, you look at Solving the Money Problem, and if you haven't seen one of my good friends, Darryl Saguil, he put out a really detailed analysis. You should check out his video. I'm going to leave a link down below to his, where he has done his forecast on Tesla out to 2030, and he shows a detailed spreadsheet. But if you look at the range, you're looking at people based on assumptions, but tangible assumptions, showing a market cap in the anywhere from the 5 trillion to like the 10 trillion mark. And I really think the 5 trillion is being conservative, but that's my opinion. Now, I have to do more detailed on my detailed forecast before I can come out with actual better accurate numbers. But based on a rough number, I don't see this company being worth less than 5 trillion in the next 10 years if they can execute the way they say they are. Now that's the big if, because anything can happen in the stock market. I keep in my stock portfolio a stock that I invested in, a small amount of money, but it was based on a hunch from somebody else that said, hey, invest in this company, it's going to explode. I said, what the heck, let me take a chance. I put in about $1,000. At that time, the price of this company, they were trading at about $13. Today, the company's trading at under $1. So I basically took my $1,000 and brought it down to zero. And I still own the shares, and I keep it in my account to always remind me that no matter what, anything can happen with one company. And that's something that you always have to keep in the back of your head. So yes, I put a high percentage of my portfolio in Tesla, 80%, but I keep that 20% because I still know that anything can happen. Something can go wrong with the company, and there will be things that go wrong that cause the price to drop over the next 10 years. So, that's something to keep in mind. At the end of the day, you have to do your own due diligence and figure out, where is the best place to put your money for your risk level. But whatever you do, just remember, keep on growing, keep on learning, keep on loving, and keep on living happy. And I wish you all the best. Take care. See you in the next video.